Having a look at the markets, it's indeed an all-time high levels coming in for the Nifty 50 because we have scaled past that 25,100 mark as well on an intraday basis. For now, Nifty 50 is holding on to the gains and even the broader markets are supportive today. But it's the IT pack that is indeed the showstopper till now. What we are seeing is that a lot of counters from the IT space are bucking up the trend, but it's Nifty Bank as well that has been languishing a little bit. But let's try and understand more on what is stacking up on the fundamental basis as well as what should be the outlook on the benchmark indices. We are being joined by Gurmeet Chadda, Managing Partner and Fund Manager at Complete Circle Consultants. Hi Gurmeet, thank you so much for your time. Firstly, share your take on the benchmark indices. Great moves because we have been waiting to look at that all-time high levels, and just in 1 month, in the August month itself, we are seeing Nifty 50 hitting the record high for the second time itself. Where do you see the market moves headed, Gurmeet, as well as what's exactly is fueling the rally as per you?
Congratulations to all investors, and I think this is just amongst the many all-time highs we'll keep hitting. As we embark on the 10 trillion journey in this decade. I think broadly what has happened in last few weeks, especially, is the macro setup has become quite positive for India. Crude has been around $80. Dollar index has fallen from 104 levels to around 100. The Fed chairman has, spoken about the direction now is clear in terms of the rate cut cycle starting. Yet he did not comment when and what quantum, but I think the market is now starting pricing in about 50 to 75 basis points kind of rate cuts over the next maybe 6 to 9 months, led by US, followed by us. And in general, I think the overall macro setup is good. The current account deficit is less than 1%. We still are the fastest growing economy. The only worry and concern I have is the tepid earning growth in Q1. So while we celebrate new milestones, it's important to not lose sight of valuations. Markets are currently in a fair plus zone. Nifty is 22 times forward. 21 times forward, and the mid and small cap indices are upwards of 25 times. So you got to be careful in terms of incremental deployment. But yeah, as I said, one of the few milestones, I think there are many more to come in the long run.
But that other part is that there is a consensus view that there is some concern related to the valuations, but nobody can question the move on the markets that we are seeing. But Gurmeet, there's a lot of sector churning that is happening and what we are seeing is that the investors are shifting their focus now to some of the defensive plays, some of the underperformers, maybe from the IT and the pharma space, and the sectors that have done well in the past, like defense and railways, they are taking a bit of a backseat. But going ahead, Gurmeet, where do you believe that investors can concentrate right now and they have a good opportunity to have some decent moves and expect some decent moves in this market setup as well?
Well, absolutely. That's, you guys report, I think market sector rotation is sharp and very swift. Nobody was willing to look at IT and pharma 6 months back. The same IT stocks, Infosys was $1,200, TCS was 3,000. HCL Tech and Tech Mahindra were around 1,000 levels, briefly sub 1,000 also. So was the case with pharma and even FMCG. So rotation is always fast, and IT, pharma are very defensive. And it all started when we saw a bit of a turmoil with yen carry trade unwinding. Investors flocking to IT and pharma and FMCG. I think you got to be a little more forward looking, and that's what market rewards if you are a little ahead of the cycle. I think now that, we are clear that we'll start with rate cuts, I think financials may come back in favor, especially NBFCs, which have been completely out of favor because NBFCs rely more on wholesale sources of funding versus banks who still have CASA. So a lot of good NBFCs have very, really underperformed in the last 2 years, considering how the broader market has moved. So I think good quality NBFCs could be one. I think private banks, again, the large private banks have been in a range, whether it is ICICI, SDFC, Axis. So I think financials will make a comeback. Bit of rate sensitive also, combination of reality and cyclicals, I think can do a little better. But as I said, just be mindful. We've made good money. it's also equally important to, preserve some of those gains. And I do not mind some diversification in bonds and gold also, considering that interest rates are likely to fall. So long-dated bonds and gold, considering we have so much geopolitical turmoil, can also deserve some allocation in the overall portfolio.
All right, Gurmeet, with this, we'll let you go on that. Thank you so much for sharing your take on the markets, as well as sharing your take that the NBFCs and financials can do well, because do remember the Nifty Bank is still like almost 2,000 points away from its all-time high levels. But with this,
if you like this video, then like, share and subscribe to ET Now.